The S&P 500 set to log its 41st straight session without a 1% move. How should the lack of movement affect your investing strategy? Welcome to Trading Nation. I'm Susan Lee. Craig Johnson is a technical analyst with Piper Jaffray, and Eddy Elfenbein edits the Crossing Wall Street blog. So, Eddy, should this matter for investors?
I wouldn't be lured into it. I mean, the stats are pretty remarkable. The S&P 500 has now gone 80 straight days without a 1% drop, 41 days without a 1% move of any kind, and it's at 35 days where the high and low has been less than 1%. That's a 40-year record. But here's the thing. We saw these same sorts of streaks right before Brexit, before we had an extremely volatile week. We saw the exact same stats creeping up again in August of 2015, when again we saw extremely high volatility in the market from problems in Asia and things like that. The thing is that these things revert. When you have a very placid market, you know at some point it will end. You just don't know when. So the thing that traders have to be aware of is don't get used to this. At some point, we will see volatility come back, and it will come back very sharply.
Yeah, so what do you think, Craig? Complacency, is it necessarily a bad thing?
Well, it's not necessarily a bad thing, Susan, and I brought in the chart today of the S&P 500. And I guess from my perspective in the technical world is this. You've got two types of corrections that can occur. You can either have a correction in price or a correction in time. And at this point in time, we're getting a time correction in the overall broader market. I think a lot of investors are trying to digest the move we have seen post the election here in the United States. A lot of promises need to be fulfilled, and we've seen the market move up on some of those promises, and now they're waiting to see if those ultimately come through. And hence, we're seeing this time correction in the market. But the point that I would make is if you look out longer term and you study some of these periods of time correction, like Eddy said, they tend to resolve themselves in either one way in a pretty sharp fashion. But historically, time corrections have resolved themselves in a move upward, as this is just the pause that ends up refreshing the move for investors. So from my perspective, I'm still looking for 2424 on the S&P in 2017, and I think this time correction will just be temporary in nature.
All right. Well, Eddy and Craig, thank you so much for your time, and thank you so much for watching Trading Nation today. I'm Susan Lee.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.